You don't actually have money in the bank. Yes, it sounds strange, but this isn't a metaphor. It's literally not there. If everyone went to withdraw their money tomorrow, the system would collapse within hours. Because that money simply doesn't exist. And this isn't a mistake, it was designed this way. The global financial system has worked like this since ancient times. It's been around for so long that we've come to see it as normal. This system is called fractional reserve banking, and it's the silent blade behind global debt, inflation, and fake wealth. Once you understand how it works, you realize that money is built on nothing more than a promise. Here's where the story begins. Once upon a time, money was gold or silver. To be rich meant having gold coins in your home or vault. But carrying bags of gold was risky, so people began leaving their gold with goldsmiths, trusted men with strong safes. In return, the goldsmith would give a receipt. Bring this paper back and you can reclaim your gold. Over time, people realized that these receipts worked just like gold. They were easier to carry, and everyone accepted them. And that's when the trick was born. Goldsmiths noticed that no one ever came to withdraw their gold all at once. If they had 1,000 coins, usually fewer than 10 ever left the vault. So they came up with a brilliant idea. If no one's taking all of it, why not issue more receipts than gold we have? And they did. They had 1,000 gold coins but issued 2,000 receipts. They lent out the extra receipts at interest, earning money from gold that didn't exist. As long as no one came all at once to claim their gold, no one noticed. And thus the art of creating money out of thin air was born, the birth of banking. This little trick worked so well that an entire banking system was built on it. Even England adopted the same method in the 17th century. When the Bank of England was founded in 1694, it wasn't to serve the public good, it was to save a debt-ridden monarchy. The bank lent more money to the government than it actually had, and charged interest. Those debts weren't paid off through conquest. They were paid with taxes. Sound familiar? The same system still runs today. Governments borrow money that doesn't exist, and pass the debt to future generations. The modern version, a game played with numbers. Today, when you deposit $100 in the bank, you believe it's sitting safely in the vault. But the truth is, the bank keeps only a small fraction and lends the rest out as credit. It used to be around 10%, meaning if a bank had $100, it kept $10 and lent out $90 to someone else. That person spent the money. The shop deposited it into another bank, and that bank did the same thing again. Step by step, your $100 becomes almost $1,000 in circulation. But here's the truth. Only the first $10 is real. The remaining 99 is debt. Every new dollar is born from someone's borrowing. The real shock, there's no reserve anymore. And here's the truly shocking part. Even that 10% no longer exists. Since 2020, US banks have had zero reserve requirements. Zero. That means the old rule. A bank can only lend what it holds in deposits when it's gone. So what stops them from lending infinitely? Something called Basel regulations. In the Swiss city of Basel, central bankers meet to decide how much risk banks are allowed to take. If a bank wants to issue a risky loan, it must hold a small portion of its own capital as a safety buffer. So control now lies not in the cash vault, but in regulations. So what does this lead to? This system has three inevitable consequences. 1. Inflation. Because the same money is multiplied over and over again. Every new loan reduces the value of money a little more. 2. Perpetual debt. Since money is born as debt, total debt will always exceed total money. That means someone must always keep borrowing. 3. Concentration of power. Banks earn interest on money they never actually had. Governments finance wars, aid, and bailouts, not by printing money or raising taxes, but through this very system. The wealthy grow richer through their assets, while workers' wages lose value to inflation. The same story throughout history. Every time the system hits a limit, the illusion bursts. The Great Depression of 1929 was exactly that. Banks had lent far more than they held. And when panic struck, everyone rushed to withdraw, but the money wasn't there. Thousands of banks collapsed. The same thing happened in 2008. This time, the bubble was inflated with mortgage loans. Once again, a balloon blown up by money that didn't exist. When it popped, governments printed trillions to save the system. Because if the system collapses, modern economy stops. So what can we do? Just understand this. The system cannot survive if you are debt-free. If everyone paid off their debts tomorrow, the money supply would vanish, banks would fail, and the economy would freeze. This system runs on your belief. Your borrowing, your spending, your glance at your card thinking, I have money. You are both the fuel and the collateral. What is real wealth? Real wealth isn't numbers on a bank screen. Real wealth is land, knowledge, skill, productive power, and independence. Things that can exist outside the debt cycle. Debt is never neutral. The system always favors the lender and the state it finances. And inflation, it's not a flaw, it's a feature. Every year we work a little harder just to stay in the same place. But this isn't a call for despair. It's a call for awareness. If you understand how money is created, you can protect yourself from the game. Because history whispers the same truth every time. When promises outnumber real wealth, trust eventually collapses. And when trust is gone, no system stands. Next time you check your bank balance, remember this. Most of that money is just numbers. It doesn't really exist. And this system wasn't built for your freedom. It was built for its own survival. But once you see through the trick, you can start protecting yourself. And maybe for the first time, you get to write the rules of the game.